right, ladies and gentlemen, let's go. We got a few people here. The rest of the people can just watch it on the replay. Learn how to milk your S corporation for tax-free cash, right? Now, before we get started, guys, what I want to do is that I want to just briefly, I know some of you already know this, but for those that don't know, what is really an S corporation, right? And let's just briefly cover that. An S corporation is an entity, a legal tax entity that is a pass-through entity, right? And that means that it passes through the income to you from the business. And some people think, right, and this is important even for those of you that have been in business making money and you think you have an S corporation, right? Some people think that when you form a corporation in America, let's say an Inc., right, or a corp, right, they automatically are an S corp. They tell their accountant or LegalZoom or whatever that is, yeah, I want an S corp. But when you form a corporation in America, it's automatically a C corp, right? It becomes an C corp. You have to make an election to be taxed as an S corporation. Now, the S corporation is really for small business owners. You have less than 100 shareholders, family members included as a one shareholder, right? Less than 100 shareholders, pass-through entity to protect small businesses from being double taxed. That's really the gist of it. Now, the reason S corporations are really, really popular is because it just rolls off the tongue of everybody. Oh, are you an S corporation? I have a business. I'm paying too much taxes. Are you an S corporation, right? And it really brings me before this slide, right? Let's talk about this. What is the purpose of your S corporation entity, right? Like, can we talk about that for just 1 minute? I covered it shortly last week, but why do you have an S corporation? I typically recommend an S corporation. I personally started with an S corporation. I have it right now, but I don't know if its purpose, if my S corporation personally going to feel its purpose going forward. What do I mean by that? Now, because we have to focus in what is the purpose of your S corporation? When you're one business, operational business, have nothing else going on, new business, existing business, S corp is the best, right? In generally, most cases, S corp is really, really good. You've got a reasonable compensation and all that stuff going. But what is really the purpose of your entity? Well, my purpose is that to turn it around and sell it. Oh, then maybe we should be in a different entity structure, such as C corporation. I want to bring in more investors, more partners. More venture capitalists. Hey, we need an LLC or a C corporation. Right? First, we need to define what is an S corporation and what is the purpose of your business. What is that you're doing? Hey, this is just my cash cow business. I'm going to live off this business. This is what I'm going to produce in. And then I might have other investments and so forth. Great. Now that you have down that purpose of your business, then maybe it is a good idea for you to be an S corporation, right? So we kind of got that basic out of the way, right? Now we have to focus on maximizing our deductions. The most common question I get, the most common thing that I get from people that want to work with us, and they get on a call and say, I tell them, hey, before, what really made you, pick up the phone and speak to us, right? Like, what really made you decide to reach out to us? Oh, well, my CPA, my accountant doesn't tell me anything I can deduct. You kind of, he doesn't tell me what I can deduct. I'm like, look, the rule is simple. You obviously don't know about the tax strategies and some benefits, which we're really going to cover here. You guys are going to love it. I'm going to get to it in a minute. But a rule of thumb for everybody, guys, a rule of thumb, anything that is directly related to the business that you're doing to produce your income and expenses, right? Ordinary and necessary expenses are business tax deduction. That's it. Now, if it is indirectly related, but it benefits you producing your income under the section 162, ordinary and necessary business expense, also a business deduction, right? So think of it this way. If you're doing it for the business, then it's a tax deduction. That's it. Now we need to work on tax planning and figure out what other expenses that are not black and white that I can legally, so to speak, create, right? And take a deduction, or I can legally deduct by knowing the tax code. And this is exactly what this training is for. Now, I think we got that, right? We spoke about that. All right, dividend distributions. Now, I'm just going to cover this a little bit before I move on. It's very important for people to know what are dividend distributions in your S corporation. I already spoke about earlier. S corporation is a pass-through entity. What does that mean? It passes through the income to you. The purpose of an S corporation is that, first of all, you're not double taxed as a C corp, and you become an S corp, so you don't pay extra Social Security, Medicare taxes. You only pay that on your salary. The rest is left in business. This is the common mistake. Everybody that's on this call, listen to this. If this is you, type in me. I hope you don't type in me, right? Because I don't want you to be this mistake. I just got off the phone actually earlier with a prospect that had this mistake. The CPA tells them, hey, zero out your profit at the end of the year and take it all out as a salary and not as a dividend. What? That like defeats the purpose of the S corporation. The guy's making like 300,000 bucks, I think, or 250,000 bucks, right? And it's taking a huge salary instead of taking out dividend distributions, right? Now, why do we need dividend distributions from an S-Corp? Because it's not subject to double taxation and you save on self-employment taxes, okay? So that is super important for you to know for those of you who are newbies. Once you understand this benefit from the get-go, before we even start talking about how milking our S-Corporation for taking out tax-free cash, understand this, right? So those are the basics, and I hope I didn't bore anybody with the basics, but let's talk about an accountable plan. Some of you might read it in my book, but I really want to get into details of what is an accountable plan. How does it work for business owners? Okay. Now, the accountable plan is basically a piece of document that says, hey, ABC Corp may reimburse its employees for business-related expenses. Employees have 60 days to submit the receipt, and ABC Corp has 30 days to reimburse these employees. Now, why is this important to you? Well, you're a business owner. Very often you spend money for the business from your personal account. I don't know, left a business credit card at home and you made a $500 purchase, right, in Costco. Is that deductible? Well, hey, if you follow me long enough, you know Costco purchases are tax deductible, but that's a conversation for another day. Anyway, so now you paid $500 from personal expenses, right? You paid $500 from personal credit card. And now if you take the money out of the business, we have this weird law that any money that is reimbursed by the company should be added on a W-2, subject to payroll tax, all this inconvenience, unless you have an accountable plan in place. Like, all right, Boris, well, I'll stop using my personal credit card. How else is this going to benefit me? Very simple, ladies and gentlemen. Okay. Now, you cannot, like a lot of people ask, hey, do you work from home and do you take home office deduction? And they're S corporations. They say, oh yeah, I sent something to my CPA and he doesn't. Wrong, right? So if you are that person, I sent paperwork to my CPA and he does it, wrong. He has to follow the rules of an accountable plan. He has to reimburse you, or you have to reimburse yourself every month for all your home office related expenses plus the depreciation. You can actually depreciate your home and take out reimbursements from the business. The business will write you a check and you're not going to pick up any income on your end. Now the business is going to reimburse you for utilities, mortgage interest, property tax, HOA fees, cleaning fees, maid services, any repairs that you did to your home that affects your home office, plus the depreciation. Every month you will reimburse yourself based on the square footage of your home. And you can only do that if you have an accountable plan. Now, a lot of people say, no, Boris, we can't do that. Oh my goodness, we can't. IRS is going to come running after us. This is going to pick up some crazy red flags. Ladies and gentlemen, the IRS, for those of you who don't know, is now working from home. Okay, I'll just leave you with that. This is the 1980s myth that IRS is going to come to you. For crying out loud, the IRS works from home. Working from home is absolutely allowed, and you can reimburse yourself. We include this in all the tax plans that we have for our clients. Now you said, Boris, why is this so important? Why are you so hung up over it? Well, I got a little bit of a benefit. I'm writing off my home. I also have a home office deduction. Well, guess what? Did you know that you can actually have an actual office location, a business, a medical practice, a law office, a freaking insurance office, a warehouse, a furniture store, I don't care, you name it, right? And you work from home and you do administrative stuff from home. Hey, look it up. I'm not lying to you, right? I'm not just making things up here. The IRS code says that if you're doing administrative work from home, your home is considered the principal place of business. Whoa. Now, if it's considered principal of place of business, that means you can reimburse yourself for home office. Here's the kicker. When you travel from your regular home to your work, you can't take those travel expenses. You can't write off your mileage, your car expenses, your gas mileage, or anything of that sort. You just can't, ladies and gentlemen. But when you have a principal office in your home, you now have created a work location. This is all legal in the IRS code. Please look it up. If you guys want, I'll send you all the tax codes and stuff, right? And the IRS says, so now because you have two work locations, because the travel is deductible between location number one and location number two. So you've got a home office and you've got actual business location, let's say your furniture store, office, insurance office, whatever that is you have, right? That travel back and forth is tax deductible. That is why, and so what happens? You reimburse yourself once a month right? Once a month, you submit reimbursement report. This is how much I spent for my gas, for my insurance, my miles, my home office, my this, my whatever that is. And then the business writes you a beautiful check. And ladies and gentlemen, you don't pick it up as an income and the business gets it a deduction. This is secret sauce number one. And for those of you who are afraid of IRS, please go back to your room, lock the doors, put in 15 locks, write out a check to the IRS and say, please do not come after me. Now, I'm kidding. Don't do that. But I'm just saying, guys, anything that I'm giving here is not a legal advice. This is just all the IRS code. All right, let's continue. This is actually getting really, really juicy. Now, kids on payroll. Now, what the hell is kids on payroll, guys? What is this? What is this putting kids on payroll? Well, here's the thing. Before we start trying to get fancy, oh, I can hire my kids and put them on payroll. Let's talk about some rules, please. Let's follow some rules here, okay? First of all, your kid has to be legitimately doing work in your business, right? Don't hire kids at 5 years old. Don't give them a big check at the end of the year. That's not going to fly with the IRS, right? Don't get cute. All right, let's use this legally, right? And how can we do this? First of all, let's understand the rule. Anybody in America that is filing a tax return and makes under $12,950 on their taxes does not have to report income and file their taxes. Again, anybody in America, I don't care who you are, if you're filing your taxes and you make less than $12,950, you don't have to pay any federal income taxes. Done. It's the standard deduction. That's the law we have. All right. Up to $12,950 is not deductible. Now, you might say, great, this is awesome. So what do I do, Boris? Well, now you can put your kids on payroll, right? You can put your kids on payroll, pay them up to $12,950. And guess what happens? You take that as a deduction. The child does not have to pick it up as an income. Or they do pick it up as an income, excuse me, but they don't have to pay tax on it. You do have to legitimately pay your children on W-2. There are rules and regulations to follow. Very important to make sure you're doing it with your tax planning and not just like, hey, I heard Boris's thing. Let me go put my kids on payroll. Had plenty of those situations. People put kids on payroll, blah, 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 and done. Hey, it doesn't work that way, right? If we know what we're following and we're doing proper documentation, man, this is $13,000. Imagine we got 3 kids, $39,000 in business deductions. Actually, I should have put a testimonial here. You guys check out the guide section. There's a guy there. What is his name? Jerry, guide section. Check it out. He's like, man, he basically starts shifting income to his family members. He's like, I shifted out like $150,000, all legally from his tax plan, right? Check out that testimonial. This is not just kids, guys. This is family members. You can get really, really creative. This is just a small portion of it, right? You can really, really get creative how you're going to do this, okay? And hire your kids. Now, true, when you hire your kids out of the S corporation, you still have to pay payroll taxes. The benefit outweighs the cost. And again, you need planning for this. Please do not do this. Do not attempt this at home. You guys ever watch the WWF, WWE, whoever has that, whoever watched that, let me know. Let me know in the chat. You guys, only Todd's asking questions. I like people with questions. I'm always the first one to ask questions. Todd, I get to your questions as soon as I'm done here. Now, let's talk about another way to milk your S corporation. Section 127, tuition reimbursement. Guys, I just realized I went through this whole presentation and I skipped the fringe benefits for the S corporation owner. Wow, I suck. All right, let's go back for a second here. Where are we? Did I talk about this? I think I missed it. I'm just going to touch upon this because this is really, really important. S corporation owners are not entitled to any fringe benefits, okay? If you're more than 2% shareholder in the corporation, you're not entitled to fringe benefits. So you have to get really, really creative, okay? You really, really have to get creative. And the way you get creative is the way that was just describing with an accountable plan and hiring kids and all that stuff, all right? So just note rule of thumb. Fringe benefits for S corporation owners more than 2%, you can't do that, right? If your spouse works for the business, she's not an owner, under the IRS attribution rules, can't do that. That's a no-no. Got kids under 21, can't use fringe benefits for them as well. All right, sorry, I missed that as I was going through the presentation. I don't know how, but just remember that rule of thumb. That's why we're trying to kind of get a creative over here with an accountable plan, putting kids on payroll. And now we're going to talk about Section 127 tuition reimbursement. Now, what is Section 127 tuition reimbursement? All right, I'm like running behind my time here. All right, Section 127 tuition reimbursement. Guys, everybody in America that is a corporation, every corporation, some of them offer this benefit. If you go to college, we'll reimburse you up to $5,250 under IRS code section 127. Why is that important? Because those tuition reimbursements are not taxable to you, to the employee, right? So I just said that you are an owner. If you are an owner of the S corporation, you can't reimburse yourself for tuition reimbursement. You're not in school, first of all, but even if you were, you can't, okay? Because you're more than 2% owner. Can you reimburse your kids? The answer is no if they're under the age of 21. If they are under the age of 21, they're considered as owners of an S corporation because they're your children. But once the kid hits the 21 years old, bam, and they're in college, man, not only can you hire them and pay them $12,950 we talked about, you can pay them additional $5,250, free of payroll taxes, free of income taxes, doesn't even have to be picked up on the income tax for them, and it's a fringe benefit, bam, paid out. Now, this gets even better. Section 127 tuition reimbursement under the CARES Act. When the CARES Act passed because of COVID, they have expanded it. And this is what they said. It is not only going to include tuition reimbursement, but also any student loans that your employees pay. What? So if you got children who finish college by the age of 21, but they've got student loans and you can put them on payroll, you can reimburse them for their student loans up to $5,250. Guys, this is what I call the prime example of milking your S corporation for tax benefits. Come on, give me some love in the comments. I'm not going to continue. Give me some love in the comments, guys. Come on, give me some love in the comments. Let's do this. Even though the comments are delayed, I'll wait a second. Let's do this. Give me some love, guys. Give me some love. Give me some love in the comments. Todd Bassler said, wow, that's right. Wow is right. Todd, listen, man, you're the only one following this. I feel like, oh, Natalie, I'm loving all of this. Todd, have 3 teenagers now. Todd, we're going to do great things for you. I know you and I are scheduled on the call. Ina, great stuff. Larry, great, amazing, guys. Come on, comment. Who else is here? I want to hear you all because I'm going to get to something even juicier. Am I? I think this is it. But anyways, give me some love, guys. Give me some love. All right, awesome. Let's continue. I got enough love. Thank you, guys. That was great. And you're right, Larry. It is great stuff, right? We just have to, by the way, guys, nothing is illegal here, right? I do want to give a caveat. I hear, you guys hear my wife laughing in the background? I don't know. Anyways, I think she's watching live. Cool. So section 127, there's a caveat to section 127, unfortunately, right? There's a small caveat. The caveat is that this is a fringe benefit that you're offering in your company, and that means you cannot discriminate. That means you cannot just say, hey, I'm going to pay my kid, but I'm not going to do it the rest of the employees. Now, before the CARES Act said you can do it for the student loans, like, you know, most of your employees are not in college. This is only for employees that are in college, right? So you can still implement it for your kids, but you might have employees on payroll who are in college and paying back their student loans. So when you put together the section 127 plan document, you should be very specified, hey, we're only reimbursing for tuition or including student loans. If it's student loans, you want to make sure that your employees maybe are not participating. Oh, excuse me, they don't have student loans. Otherwise, you have to do it for everybody, unless you want to offer this benefit to them and it's tax-free to you and your employees. They're probably going to love this stuff, right? They're probably going to love this stuff. Now, what was I going to do next? I was going to mention something very quickly. Man, I forgot. Oh, yes, very important note. Now, when I talk about your employees, I don't mean their children, right? You could have 3 employees who have 3 children in college, right? No, it has to be an employee that works for the business, not a children of the employee. So which is a great benefit, right? So your employees might not be in college, but your child might be in college and you can pay the child tax-free, payroll-free, doesn't get reported, all that stuff up to $5,250. Great, let's move on. Tax planning versus preparation. You guys know this is coming. Hey, show me some love, comment tax planning below, because I want to talk to you about importance of tax planning. All the stuff that you learned here, I can guarantee you right now, if I'm wrong, type in the comments wrong. I can guarantee you right now, your preparer did not tell you about this stuff when you came to file your taxes. Ladies and gentlemen, tax preparation is something that's done at the end of the year. It's really putting the right numbers in the right boxes. If you really want to minimize your tax liability and pay yourself through your tax savings, this is when you need tax planning. Okay, so go ahead and comment tax planning below if you want either myself or one of my team members to reach out to you to see if we would be a good fit for tax planning. We will get creative legally with tax strategies to reduce your taxes. We like to work with business owners that are profitable. If they have profits in their business, there's definitely money to be saved on taxes. Go ahead. I hope this was helpful. Comment below, say, hey, comment below, I'm next, or tax planning, whatever that is, right? Hey, just let me know if you want either me or my team to reach out to you to get the conversation going and see if it would be a good fit and really help you with all the stuff that I have just described here. Hey, Boris Mashev here. Thank you so much for watching the video. Look, if you like what you saw and you like to see more of this, go ahead and subscribe below, because every time when we're going to release a new tax strategy video, you will be notified. And it's an amazing content, and we hope you enjoy it. Now, I don't know why I'm talking about content, but anyways, first of all, go ahead and hit the subscribe button. Number 2, go ahead and like this video if you really do like it. And number 3, the most important thing, I'd like you to comment below any questions that you have about what you just saw, or anything that you would like to learn in particular. I will personally review those comments and we'll make content based on those comments for my viewers. Thank you so much. Till the next time.